What's up YouTube, it's Louis here, I hope you're all well. We're looking at Bitcoin again. I just want to let you guys know we've turned on the super thanks and we have some new memberships on the channel, but don't worry if you don't want to take up on them. There's no difference if you don't, there's just exclusive perks with the different levels of membership basically. So go check them out please, it's just down below where it says join, and if you want to leave and give back to the channel, if I've made you or saved you loads of money, if you want to give back to the channel, there's the super thanks down below, or even the memberships. Thank you guys so much. Please like, subscribe and comment. Now let's get on with Bitcoin. So we still have this falling wedge that we're waiting for a bounce. We have met one of our bottom targets, which was 25.8k. We called it with this descending triangle over here. It was also at 1618 target, 26k. And with this, you've had this crazy bounce from the bottom of this falling wedge, which is a bullish pattern. It has a 66% chance of breaking up, but it still does have a 33% chance of breaking down, which is absolutely massive. And I've given you this example multiple times. Man City and Real Madrid in the Champions League, they said there was a 99% chance of Man City winning. Within the last 5 minutes, the game completely turned around and it went to extra time, and the team with the 1% chance of winning actually won. So here you've got a 33% chance of this actually going down. So it's a big chance this does go down. Of course, a bigger chance it goes up, but we need to have in the back of our heads, this can go wrong, this can go sour and break down, and we need to be prepared always. So if that scenario happens, the one that we don't want, the one that really should not happen, the bearish scenario, if we were to lose this support, of course you're going to try and lose this wick. If you remember from yesterday's video, we went through this scenario, how I think we were on the 1 hour time frame. We will look at this trade again because today, but we were basically saying how even though we took a loss on this trade, it never hit stop loss, guys, which is so annoying. But even though we took a loss on this trade, we still believed, and I was telling you guys in yesterday's video, we still believe that this is going to come down, and the main reason was actually this dead cat bounce scenario. Now this is on the 1 hour time frame, so when I'm saying dead cat bounce, guys, don't take it literally. I'm not talking about this, monthly time frame dead cat bounce. We're talking about a tiny one on the 1 hour time frame. And to be honest, guys, this dead cat bounce name, it's all nonsense. All it is a fib retracement. What is this dead cat bounce, dead cat bounce? No, it's just the fibs being used as they should. You've had this impulse to the downside, then you correct up. That is what is signaled by this bullish channel over here, because we know when you have an impulse, you correct. And with bullish channels, they tend to break out bearish. So it's a push, exhaustion into the 618 before continuation. And then, yes, they make it difficult by saying, oh, dead cat bounce, when in actual fact, guys, it's just a regular fib retracement. There's no fancy name to it. I don't know why they want to confuse everyone calling it a dead cat bounce, because whenever you say dead cat bounce, people think the end of the bull run. But in reality, it's just a fib retracement, guys. Just how the fibs should be used. So we're going to use the fibs in a different way. We're going to now use them as a reversal tool to see, now that we've lost this low, where are the targets to the downside? So you can see we've got targets down to 28k over here. So this is why with this trade, we were actually willing to take this trade down to 28k, but we'd like to front run the market, so we put it a bit higher. I'm so annoyed about this, but you can see, even if we collapse, your final target would be 26.8k, and that would still be a higher low. So honestly, guys, this could be the end. This could have already been the bottom. However, on this channel, we have been speaking about the potential scenario that if we were to lose this low, we will go down to 22k. That could be the low. But also, we've gone through the channel previously why 19 to 20k could be a target. We've gone through on the channel that we could be changing history. Made a video a week or two back on how Bitcoin could be changing 12-13 year history, which is Bitcoin coming back down to the previous all-time high, something that it's never done again in its history. So I'll just double check. I've completely forgotten how I got the trend line. Okay, yeah, I've got a chart with it all done already. Perfect. I'm happy. So we had a neckline over here of a descending triangle. We have this descending triangle here. It's this one that I called out. with the target 25.8k here, you've got your resistance, your downtrending resistance, which also was validated by this April high last year, December last year, March this year. And then this was your neckline, 36k. Go back to that chart. And obviously that target that we've been met is from here to here. Okay, on this chart it hasn't been met, but I've shown you on the other charts it has. Now on this chart, because every chart is different, by the way. And then now I think it's from the top there, because we've had a fake out, from the top there back to the support, and you can see, put that on the breakdown. Once you lost that support, which we have, you've now validated this target back to the previous all-time high. So we are in a target for the first time. We have already begun to change history by putting in a target to this previous high. It means that it should really go there. But is everything 100%? No, we talk about this every day on the channel, especially yesterday. Whoa, we were ranting. But yeah, we're on our way there. The only thing stopping us is this key support that we've had since January 2021. Not June 22nd, 2021, but January of 2021. That was the true low, 27.7k. This chart is wrong. Let's go to the true chart. 27.7k is the January wick low. This is the bit stamp chart. This is the one that majority of the people use. Now, that's the bearish scenarios, guys. We prepared you for that today. Now you can see out of this Fibonacci, you have met the 1618. So we are anticipating this bounce. This bounce must reclaim $33. $33.33k. And you can see you had that. You got above the 1414 and the 1.272 on the weekly time frame, kissing this 200 EMA. Beautiful. So this is why it could well and truly be the low, as long as with this dip that we're seeing, we're creating this higher low, and then we're reclaiming the 33k area. Then that needs to be obviously flipped into support, and then we can start to head higher. But again, guys, step by step, I'm not going to get you guys overexcited, because there's nothing to be excited about. We're in this pattern that, yes, has more chance of going up, but yes, still has a big chance of going down. So we've prepared you for those scenarios today. I hope you guys enjoyed that so far. Please support the channel by liking, subscribing, and commenting. That's what's going to get this video up in the search results. So more like-minded people like us, unbiased people, not this feeding nonsense guys. Do you want these guys feeding nonsense to everyone to be at the top of the search results? If not, then you have to subscribe, you have to comment, and you have to like. Super thanks is also really appreciated. We haven't received any yet. It would be amazing to start seeing some of them. So yeah, let's go to this trade now, which is so annoying. We sort of covered it a bit today already, but we never even hit stop loss, guys. It's just I got really thrown off because we had this double bottom neckline. You got above it. You never met the target. You should have even gone to the 200 EMA, but you didn't meet both of its targets, the double bottom target or even the 200 EMA. This was a very bearish signal for me. So this is why I was looking for a short opportunity. Then we had this M pattern over here with this neckline. And once you lost the neckline, you validated this M pattern's target. Not only that, you started dumping and you lost the W double bottoms neckline, which should never have been lost. You should have held it as support to continue to the 200 EMA, because that's what happens when you get a bullish cross. You're meant to go to the 200 EMA. So it was not doing what it should have been doing by going up further. So because of that, we took advantage of the situation. It was not going up when it was meant to. So it started going down. You invalidated this bullish pattern, means that you're no longer going up. And this was the perfect opportunity to short. And we shorted over here, right there on that candle. It was open, it was going up and down. But you can see 1, 2, 3, 4, 5, 6 hours straight of holding this resistance, which was the previous neckline of this double bottom. 6 hours of failing to get above it, had a massive spike down. Unfortunately, I missed that because I wasn't watching the trade. And when I actually looked at the trade, we were already up here. I told everyone in the chat, yes, the buyers have stepped in. This is most likely going to hit stop loss now. But I'd rather get the true result. And then saying I'd rather get the true result when it got up to here, I didn't. I closed it. So you see, this is something that's going to happen to you guys and still happens to me, even though I've traded, let's say, over 1,000 times or around 1,000 times. Probably not. But in my first year, I did 500 trades. I really don't believe since my first year I've even done 100 trades, to be honest, guys. Because I realized it's all about trading less and going for higher quality setups. That's why there's big gaps between our trades. And of course, we weren't wrong in this trade, guys. We weren't wrong. It never hit the stop loss. It was just that the signs were really throwing us off. The bulls stepped in here. You should have stayed below this resistance since you were holding it for 6 hours. One random pump completely changed everything. Then you had a bullish cross with the smaller EMAs. You actually never formed the bearish cross in the first place. So this is saying this move to the downside was a fake out. But so was this move to the upside, because it should have never gone below it. Then we were below it. We should continue lower. No, you got back above. So then we should go up. No, you went back below. Do you see how the market is basically saying that it's not safe to trade right now? Even though we didn't get the trade wrong, it was actually correct. It's playing with us. It's manipulating us, guys. And this is why it's a good idea to take a step back and not trade as often as you usually would. Because honestly, this was a 10x leverage trade. And yeah, we could have been sitting at over 34% gains at the moment with max pump could have been sitting at a 46% gain. And we in the chat, we trade with our whole account, and it's the stop loss that doesn't allow us to lose large amounts, basically. But yeah, this could have been a 46% trade in profit. Ridiculous. But yeah, thank you guys so much for watching. We're giving you the bearish scenarios, we're giving you the bullish ones. We gave you 2 bearish scenarios. We've obviously been covering the bullish one over the last few days, and today we went through the trades, so hopefully you can learn from it. Basically to trade less and to hold out the trade. These are some key points from today's lesson. If you enjoyed that, please smash the like button, subscribe and comment to get this up in the search results, so people like us are not just seeing all these stupid bullish posts. And if you appreciate the content on a daily basis, please give back to the channel by hitting the super thanks and leaving some nice comments, or even joining the memberships. If you're interested in the crypto packages that I offer as well, I'll play them now. Thank you, guys. And here are the crypto packages. Here is how to get started. Click the link to my Twitter, head over to the pinned post, and all you need to do is message under and just type, "Hey, Louis, I'm interested in the mentorship." And that's A-okay. Perfect, guys. I'll catch you in the next one. Leave a like, subscribe, and comment. Peace.